Oh, the last 10 years, we've been focused on reinventing the computer, getting it ready for generative AI. And what we're going through right now, the first wave of AI, is modernizing all of the world's data centers. $1 trillion worth of data centers being reimagined and modernized to be prepared for generative AI. And a lot of our focus has been in the cloud, in data centers and such. What we're looking at now is the beginning of the next wave of AI, the biggest wave of AI. And this is really about companies around the world using AI to be more productive as their digital employees and AI agents and co-pilots and however people describe them, as well as using AI, generative AI, to revolutionize the way they build their products and the products they build. And so we've created 2 operating systems to be able to do that. One of them, of course, is large language models with NeMo and NIM and all of our AI factories work. And the other operating system is Omniverse that allows us to represent digital information that is for the world of space-time. And these 2 operating systems are fundamental technologies, of course, but ultimately, in order to drive business impact, we're going to need a transformer, a transducer, somebody who is the connecting fabric between our enabling technology that we build in AI Foundry and Omniverse and connecting it to customers and their business impact, and that's Accenture. I can't imagine a better partner. Julie and I imagined this partnership about 4 months ago, and after that, our 2 engineering teams and research teams swarmed the building of a new platform that Accenture calls AI Refinery that helps customers build AI agents and co-pilots and AIs that help them use tools and access proprietary information and to be able to perform tasks and drive productivity. And we're working together across the agents space for employee co-pilots, as well as the metaverse place, Omniverse space for digital manufacturing. So we got a really big partnership.
JPMorgan maintained its overweight rating and $155 price target for NVIDIA Corporation, indicating its sustained confidence in the company. The firm's optimism is grounded in NVIDIA's progress with its next-generation Blackwell GPU platform, which is anticipated to launch in high-volume manufacturing in the 4th quarter. The analyst emphasized that the business expects several $billion in revenues from the Blackwell GPUs in its fiscal 4th quarter, with a significant ramp into calendar year 2025. Early product yield concerns have been overcome, the analyst said, in response to recent concerns regarding modifications to its rack-scale portfolio, specifically with regard to the GB200 Dual Rack 36X2 NVL72 solution. NVIDIA has reaffirmed its position. The business emphasized that the Blackwell GPU platform will enable more than 100 distinct system configurations and cautioned investors not to place too much stock in these reports. Compared to the 19 to 20 combinations that the Hopper GPU platform of the previous iteration enabled, this is a significant increase. It is anticipated that the GB236X2 NVL72 platform will be a high-volume platform with benefits in terms of power density and infrastructure support expenses. After 2025, the company's team is optimistic about AI sustainability and increased computing spending. This optimism stems from the early stages of enterprise and sovereign AI efforts growth, the scalability of Gen AI and foundational models, and the market penetration of inferencing. According to NVIDIA, the drive to accelerate current workloads in conventional CPU-centric data center infrastructure will support an estimated $500 billion in infrastructure investment annually. NVIDIA's established presence in the market is viewed as a key business advantage, despite growing competition from startups and indigenous artificial intelligence solutions in China. Competitors are seen to face significant obstacles to entry because of the company's robust alliances, development base, and broad software ecosystem. More than 5 million developers use the NVIDIA platform, which is supported by global ODMs, CSPs, and ODMs. NVIDIA's market dominance is further cemented by its enterprise AI software and framework platform, which lets companies quickly train and deploy proprietary models. If you want to keep up with NVIDIA's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalyst in the market. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
Jenny, it is great to be with you. Always love chatting with you. All right, let's take a look at NVIDIA. We had some commentary out from Jensen Huang yesterday. What's the latest?
Yes, good morning, Diane. I will say we have some nice stocks to talk about this morning because we're definitely not news light on this Thursday, as NVIDIA CEO, like you mentioned, Jensen Huang, did say that demand for their company's next generation Blackwell GPU platform is, to quote, insane, which is an adjective I love to hear described for Blackwell. But he did say this on CNBC's Closing Bell Overtime, along with the CEO of Accenture, to discuss their expanded partnership. During that conversation, though, Huang didn't confirm that Blackwell is now in full production and demand is progressing as planned. He did also introduce Blackwell in March as this processor for the generative AI era. So there's been so much hype around this, also so much speculation on like the timeline of deliveries and such, but did confirm Blackwell's in full production. It is as planned, and the demand for Blackwell is insane. Everyone wants to have the most, and everyone wants to be the first, he said. So NVIDIA is set to commence its sales of Blackwell's products in this fourth quarter. These new processors are expected to deliver around 2.5 times the performance of NVIDIA's Hopper chips, which were launched just 2 years ago. The Blackwell chip platform, though, has been, again, this very highly discussed topic of debate between investors and analysts, as last month it faced this scrutiny over delays over the chip's rollout. Then they assured on their earnings call that there would be not major snags in the overall supply chain and then therefore the delivery of these chips. But the concerns over these fears the company does expect several billions of dollars of revenue from Blackwell in their fiscal fourth quarter. So you can understand why a lot rides on this. And I think that anytime you have a company that is growing at the clip at which NVIDIA has been, we're seeing like double-digit, triple-digit percentage growth in their data center sales, you have to basically have everything going perfectly. You cannot have any snags in supply chain, any production delays, any hiccups, really. So I think that's why there's such a focus on Blackwell. Previously, Huang did admit that the surging demand for Blackwell chips was causing tension and frustrations with some of their customers. They actually did mention the way that Taiwan Semi, which is one of their foundry businesses, is so right now basically over capacity. They may have to consider scaling back some of their technologies and then go to like a lesser competitor to build out these chips, which I just think is fascinating. This whole world is so connected, Diane. So again, I think it really illustrates the importance of supply chain, the way nothing can go wrong at this point.
The global financial markets data company LSEG polled 60 NVIDIA covering analysts in September. A total of 18 gave the stock a strong buy rating. A staggering 37 experts declared NVIDIA to be a buy. 5 analysts out of the total saw the stock as a hold. For Palantir, the situation wasn't quite as bright. Just 3 of the 18 experts that LSEG polled last month suggested the stock as a strong buy. 3 other analysts recommended Palantir as a buy. It was advised by 6 analysts to hold the stock. 4 gave the software stock a underperform rating, 2 suggested selling Palantir shares, and 1 did neither. The difference between these two equities is further emphasized by Wall Street's 12-month price expectations. A potential upside of around 27% is reflected in the consensus price objective for NVIDIA. According to the most bullish expert LSEG surveyed, NVIDIA's stock might rise another 73% in the upcoming year. NVIDIA is preferred by Wall Street over Palantir for a number of reasons. The primary determinant is the disparate perspectives of the growth potential of the two companies. Analysts do, however, think Palantir and NVIDIA may both achieve significant growth, but NVIDIA has a stronger hold on its market than Palantir does. Analysts still predict that NVIDIA's Blackwell GPUs will be a big commercial success, even though they won't ship as soon as they would have liked. I have a suspicion that a portion of Wall Street shares NVIDIA CEO Jensen Huang's prediction that Blackwell will be the company's most successful product ever. Additionally, analysts believe that NVIDIA has a larger market potential. The need for NVIDIA's GPUs is being driven by businesses of all sizes and in almost every industry who are rushing to build artificial intelligence, AI, capabilities. Given that federal contracts account for over half of Palantir's entire revenue, the company may have less opportunities. Palantir's financial indicators pale in comparison to NVIDIA's. The company's revenue shot up 122% year-over-year to $30 billion in the second quarter of 2024. Palantir, on the other hand, saw a 27% year-over-year increase in revenue in Q2 to $678 million. Wall Street no sure loves NVIDIA's valuation too. The stock's 30.8 forward earnings multiple may make it appear pricey. On the other hand, NVIDIA has an appealing price-to-earnings to growth (PEG) ratio of 0.93 based on growth estimates for the next 5 years. Palantir has an extremely high forward earnings multiple of 87 and a PEG ratio of 1.88. So what does this really mean for NVIDIA's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Give us the big picture here for you strategically. Last year, you told us Accenture is going to invest $3 billion over 3 years in your data and AI practice, that you double your AI talent headcount to 80,000. How much of that $3 billion and 80,000 is going to be focused on the NVIDIA stack?
Well, NVIDIAStock is a great example of exactly how we're investing, because we're investing to actually help our clients accelerate their use of Gen AI to go faster. And by the way, we're using it at Accenture. So one of the things that Jensen and I agreed from the beginning was we need to have Accenture be our own best credential using this technology. And so we have now used it and are deploying it in marketing, using the engine of NVIDIA, and then seamlessly integrating across our technology stack and across our other investments in Gen AI to now go to market 20 to 50% faster, to reduce our cost. And most importantly, we rewired our marketing function to get our campaigns to actually have 35% less steps. And that's what Jensen talks about. The transformation piece of this is we're not taking technology and just applying it to what we do today. We're rewiring. We're doing the same on the manufacturing site. You probably don't know, John, but we have at Accenture 1 million square feet of manufacturing space. We manufacture customized automation robotics, and we're using the combination of AI Foundry and Omniverse, starting in the design cycle to reduce that design cycle on those customized robotic automations by 50%. We're at the beginning, we're rolling it out, but we're demonstrating that agentic architecture is real, it's scalable, and we can use that engine across and leverage the digital cores and the Gen AI investments our clients are already making.
On Thursday, NVIDIA's shares surged as much as 5% after CEO Jensen Huang declared that the company's next-generation Blackwell processors have been in insane demand. Huang stated that the chips are in full production in an interview on Wednesday following the market close, notwithstanding recent design problems that have caused some delays in client rollouts. Blackwell is going as expected, Huang remarked. Everyone wants to be the greatest at everything and to be first. Investors are worried about Blackwell's delays and think the launch will be the company's next major driver. Following a recent stock decline brought on by a sell-off in mid-July brought on by the unwinding of the yen carry trade. Since then, the markets have witnessed a rotation out of big tech, and NVIDIA's stock price has also been negatively impacted by other macroeconomic issues, like concerns about the China trade. However, most analysts and investors are still optimistic about the future of the artificial intelligence industry. The stock of NVIDIA has continued to rise, gaining over 170% in the last year and more than 2,700% in the previous 5. NVIDIA has gained almost 150% so far this year. Based on Bloomberg consensus forecasts, 90% of Wall Street analysts recommend buying the stock. Most of them believe that shares will grow to about $147.60 over the next year. NVIDIA's positive move coincides with the company's recent Blackwell update, as well as the fact that it supported ChatGPT developer OpenAI in its most recent fundraising round, which ended on Wednesday. Another encouraging indicator for the AI boom came from OpenAI's ability to raise an additional $6.6 billion, bringing its valuation to $157 billion. D.A. Davidson senior software analyst Jill Luria stated in an interview that there's a direct flow from the funding round that was announced today to NVIDIA because of the chipmaker's anticipated gain from data center demand. That's why the stock's up today, he stated.